Hello and welcome to Sectors Up Close. I'm Vincent McAviney. Our topic today is investing in gold, and our guest is Philip Palumbo, the CIO of Palumbo Asset Management. The price of gold is back in the spotlight. The ongoing geopolitical crisis in Ukraine saw the price of spot gold punch to an 8-month high on its traditional appeal as a safe haven asset. But there are other factors at play, not least of which is inflation, for which gold is viewed as a long-term hedge, especially when viewed against cash. But taking a longer-term view, gold has lost some of its shine. It's trading roughly where it was 10 years ago, while investors in the S&P 500 over the same time frame would have more than tripled their money. And there are now questions over whether so-called gold bugs have been replaced by investors in other assets, such as cryptocurrencies, leaving gold less of a speculative asset and more reliant on the traditional supply and demand dynamics of the retail gold market. While the World Gold Council said global demand for gold rose 10% last year, it remains well below its level before the pandemic. So does gold belong in your portfolio? Let's ask Philip Palumbo, CIO of Palumbo Wealth Management. Philip, thank you very much for joining us today. Firstly, you think gold should be a staple of any portfolio. Can you explain why that is?
Yes, I do. So we're in an environment where it's sell the rip rather than buy the dip type of environment. And that's due to the uncertainty around the Fed. So in 2020 and 21, where you had tremendous amount of money put into the economy, and you have the opposite effect that's going to occur in 2022, and all the uncertainty around that, the asset class that can perform really well is gold. Gold, normally when inflation accelerates, gold's an outperformer. Within gold, within a portfolio, it could provide you a hedge when stocks could go down. So for us, it's a staple within a portfolio with an allocation of 7.5%.
And how is the combination of high inflation and the Fed policy going to affect the price of gold in the short term to medium term, in your view?
And looking at the history of gold, really since 1971, you saw a correlation with inflation accelerating and gold prices accelerating. In addition to that, anytime you saw a market crash like in 2008 and during 2021, that March period, gold held out stocks very, very well.
And to what extent has gold's role in the markets been displaced by the likes of Bitcoin or other hot assets like palladium?
First of all, there's no history on cryptocurrency as there is on gold, number one. Number two, long term, when you look at the long duration assets like speculative investments such as technology stocks, there's been a strong correlation with crypto and these types of stocks. So as they decelerated and declined greater than 50%, crypto followed with that. So I don't see any type of relationship of what gold can do versus cryptocurrency.
And finally, how much should the average investor be holding in their portfolio?
7.5% to 10% is a good allocation to gold. When we studied going back to 1971, the different economic environments that one can be exposed to, whether inflation accelerates or inflation decelerates or economic growth accelerates or economic growth decelerates, gold does something within a portfolio that performs a proper balance. So when inflation accelerates and there's volatility in stocks, gold tends to be an outperformer. So it's good to have in your portfolio as a hedge against stocks going down and also to outperform when inflation accelerates like we're experiencing now.
Philip Palumbo, CIO of Palumbo Asset Management, thank you very much. Before I go, here are some stories affecting the price of gold. Russia claims on Tuesday some of its military units were returning to their bases after exercises near Ukraine, following days of US and British warnings that Moscow might invade its neighbors at any time. It was not clear how many units were being withdrawn, why now and to where, after a build-up of an estimated 130,000 Russian troops at the border with Ukraine. St. Louis Federal Reserve President James Bullard on Monday reiterated calls for a faster pace of Fed interest rate hikes, saying that 4 strong inflation reports in a row warranted action and that the need to ratify market expectations of its upcoming moves to tighten policy. Bullard helped shape those expectations with calls last week for a 50 basis point increase at the Fed's March meeting. He told CNBC that the Fed's credibility is on the line in its quest to bring inflation down from a 40-year high. And finally, known as a local salted fish dish usually eaten in family gatherings, this Egyptian restaurant is giving the country's popular physique a makeover. It is now a gold leaf sprinkled burger sandwich. Physique is a traditional dish of fermented salted mullet, normally served with boiled eggs, spring onions and lettuce. But this 30-year-old restaurant owner in the Delta city of Mansoura is making it a year-long tradition with a modern twist. Like a steak served in a high-end restaurant, Makram is adding gold leaf sprinkles to add value to the local dish. The price of a single sandwich ranges between $4 and $8. And that is your roundup of the gold sector. I'm Vincent McAviney, and this is Reuters.